Market sentiment has been characterized as weaker on the back of tensions taking place in the Middle East. And this came through in market activity, with Asian markets trading mixed, the local JSE trading largely in negative territory today, and US markets opening more or less unchanged on last Friday's close. The local currency also felt some downward pressure.
Looking at our local currency, I mean, we're out at 18.14 to the dollar. We've seen a little bit of a pickup in the US dollar index, but we are losing a ground against the euro and the pound as well. And that's also to be expected. When you see heightened geopolitical risk, of course, you see a flight to safety, and you see typically money pulling out of emerging markets like South Africa. So that move also does make sense, although it is fairly subdued. We've seen, what call it 10 cents on the local currency, which is really not big given the historical moves that we see in the rand.
Market players are keeping a very close eye on developments on the crude oil market. Brent crude oil spiked 2% in early Asian trading, but retraced those gains somewhat. This as market participants favoured rather seeing how Iran will react to the US's attack against its nuclear facilities over the weekend, with speculation rife that it could perhaps decide to close an important waterway that's commonly used by oil tankers in the ferrying of oil to a number of different countries around the world.
If you just consider the importance of the straits, I mean, they're 21 miles wide at their narrowest point. And, if you look at the volume of global oil trade that moves through there, it's around a quarter. You're talking about 20 million barrels per day. So it's around 20% of the liquefied natural gas market as well. So an absolutely critical choke point for energy. And I think the challenge around, around targeting the Straits of Hormuz is that it's also the bulk of that trade goes to China, which is a country that's come out and condemned, obviously, the US bombings over the weekend.
Boyson suggests that if the Strait of Hormuz is closed, that could result in the oil price immediately hitting as much as $100 a barrel, just for starters. So far, the market has not priced in this prospect, but should it suddenly happen in the coming days, this will lead to global inflationary pressures. And locally, this would mean higher fuel prices, which would put pressure on food prices and all other products, kissing any further prospect of a rate cut goodbye. Nampumelelo Ziba, SABC News, Johannesburg.